Nikhil, I'm curious to get your take on IEX because that one has become a classic bull versus bear kind of debate in the market because we don't know which way that coupling is going to go. What's your base case assumption?
So IEX, see, it's a good company. We've always liked the company, but there's always a regulatory overhang on it. So let's look at, see, for IEX, three things matter. One is the volume growth. Second is market coupling, how it evolves. And third is transaction charge. So on volume growth, IEX has been stellar. The last 2-3 months, volume growth is 30% year on year, which is phenomenal. Although we think it will moderate once monsoons recede, because IEX volume growth is also inversely proportional to power prices. So if power prices go up, IEX volume growth slows down. Secondly, more importantly, which is more topical, is the market coupling part. Outside in is difficult to predict. If you look at the regulatory order, which came a few months back, they will do a shadow pilot to see if coupling gives them benefits and is operationally feasible, and then take a call on whether to do coupling or not. So we still think it's a 50-50 odd. It happens, although press articles the last couple of days have been highlighting it with high certainty. And if it happens, we think it'll only happen in the real-time market, not all products of IEX. It will happen in the real-time market to begin with, and then they'll take a call forward from there. The third point in IEX is transaction charge. So the reason we have been negative on the stock is because we feel the transaction charge of IEX at some point might be under pressure. So today they charge 2 paisa to the buyer, 2 to the seller, which is 4 paisa put together. So almost a 1% transaction charge, which could come under pressure sometime in the future. So these three aspects are what matter, and so we remain negative on the stock from a medium to long term perspective.